How to start investing in real estate with no money. Investing in real estate is one of the most effective ways to build wealth, but many people assume that it requires large amounts of capital. The good news is, with the right strategies, you can begin investing in real estate even if you don't have substantial savings. Whether you're new to the world of real estate or just don't have the resources to purchase property outright, there are several creative ways to get started without having to spend a lot of money up front. In this video, we will explore the various options and strategies for starting your real estate investment journey with little or no money. 1. House hacking. Live for free while building equity. One of the most popular ways to start investing in real estate with no money down is through house hacking. This strategy involves purchasing a multi-unit property, such as a duplex, triplex, or fourplex, living in one of the units, and renting out the others. The rental income generated from the other units can cover your mortgage payments, allowing you to live for free or at a reduced cost while building equity in the property. To begin house hacking, you don't necessarily need to have a large down payment. If you're a first-time home buyer, you may qualify for a FHA loan, Federal Housing Administration loan, that only requires a down payment as low as 3.5%. In some cases, you might even qualify for down payment assistance programs or grants, making it possible to get into a property with little to no money down. House hacking is an ideal way to start investing in real estate because it allows you to build equity and generate rental income while living in the property. As the value of the property appreciates and you pay down the mortgage, your wealth grows. Additionally, you get hands-on experience as a landlord, learning valuable lessons about property management, tenant relations, and the ins and outs of owning rental property. 2. Partnering with others. If you don't have the funds to purchase a property on your own, another option is to partner with others who do have the capital. Partnerships can be a great way to pool resources and split the responsibilities and profits. When you partner with someone who has the funds to invest, you can contribute in other ways, such as providing property management skills, doing renovations, or offering strategic guidance. Partnerships come in many forms. You could partner with friends, family members, or even other investors who are looking for opportunities in real estate. The key to a successful partnership is ensuring that all parties are clear on their roles, expectations, and profit-sharing arrangements. It's crucial to draft a legally binding partnership agreement that outlines the terms of the investment, including how profits will be distributed, who will handle the day-to-day management, and how disputes will be resolved. By partnering with others, you gain access to capital without having to invest your own money up front. In return, you can contribute your knowledge, skills, or experience to the partnership. This strategy can be an effective way to get started in real estate investing without needing substantial personal savings. 3. Lease options and rent-to-own. Another strategy for getting into real estate without a large initial investment is through lease options or rent-to-own agreements. With a lease option, you essentially rent a property with the option to purchase it later at a predetermined price. This allows you to control a property and generate rental income while preserving the right to buy it in the future. Lease options often require little or no money up front. Instead of paying a traditional down payment, you may be required to put down an option fee, which is typically much lower than a standard down payment, for the right to purchase the property later. This can be a great way to test out a property and its potential for long-term appreciation before committing to buying it. Rent-to-own arrangements, which are similar to lease options, allow tenants to rent a property with the understanding that a portion of their rent payments will go toward the eventual purchase of the home. This arrangement can be beneficial for both the investor and the tenant, as the investor gets regular rental income while also securing a potential buyer for the future. For tenants, it's a way to eventually own a home without needing a large down payment or perfect credit. 4. Seller financing. Seller financing is another creative way to invest in real estate without needing to secure a traditional mortgage or come up with a large down payment. In seller financing, the property seller acts as the lender, and the buyer makes regular payments directly to the seller, rather than going through a bank or other financial institution. This can be a great option if you don't have the funds for a down payment or are unable to secure a conventional mortgage due to credit issues. Seller financing is typically more flexible than traditional financing, as the terms are negotiated directly between the buyer and seller. The interest rate, repayment schedule, and other terms can be customized based on the agreement. Often, buyers are able to negotiate favorable terms, such as lower down payments or reduced interest rates, which can make the investment more affordable in the long run. However, it's important to note that seller financing isn't always available, as the seller must be willing to act as the lender. Additionally, seller financing agreements are generally more common in situations where the seller owns the property outright and doesn't have an outstanding mortgage. If you can find a motivated seller who is willing to offer financing, this can be a powerful way to get into real estate with minimal upfront costs. 5. Wholesaling real estate. Wholesaling is another method of getting involved in real estate investing with little to no money. In wholesaling, an investor finds distressed or undervalued properties, negotiates a purchase price with the seller, and then sells the contract to another investor for a profit. The wholesaler does not actually purchase the property, but rather sells the right to purchase it to someone else. This method requires little capital upfront, as you are not buying the property yourself. Instead, your goal is to find properties at a discount and pass on the deal to someone who has the funds to close. Wholesaling can be highly profitable, with wholesalers typically earning a fee for facilitating the transaction. However, success in wholesaling requires strong negotiation skills, a deep understanding of property values, and a network of buyers and sellers. 6. Real estate investment trusts, REITs. If you're looking to invest in real estate without physically owning property, real estate investment trusts, REITs, can be an excellent option. A REIT is a company that owns, operates, or finances real estate across various sectors, including residential, commercial, and industrial properties. REITs allow individuals to invest in real estate without the need for a large upfront investment or the responsibility of managing properties themselves. REITs are traded on the stock market like stocks, which makes them highly liquid and easy to buy and sell. They also provide diversification by investing in a variety of real estate assets, spreading risk across multiple properties and sectors. REITs typically pay out a high percentage of their income in dividends, which can provide a steady stream of passive income for investors. 7. Crowdfunding platforms. Real estate crowdfunding platforms have gained popularity in recent years as a way for individuals to invest in large-scale real estate projects with relatively low amounts of money. Crowdfunding allows you to pool your resources with other investors to collectively fund a real estate project, such as residential developments, commercial properties, or even real estate startups. Crowdfunding platforms typically allow investors to contribute as little as $500 or $1,000 to a real estate project. In return, investors can earn a portion of the profits generated by the property, whether through rental income or property appreciation. Crowdfunding is an attractive option because it enables you to diversify your investments across multiple projects and asset types, reducing the overall risk. Also, if you're looking to dive deeper into real estate investing, we've included links to some of the best books on the topic in the description below. You can check them out and buy them directly from there to further enhance your investment knowledge. What do you think of our video? Let me know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also, subscribe to our channel before you go. Thank you for watching.